Guys, this is a huge announcement. Meta is looking to make large-scale layoffs for the first time ever in its history, and it's looking like those notices are going to start going out on Wednesday. At least that's kind of what the news is reporting, and it was just a breaking release by the Wall Street Journal. And so let's get right into that. So as you guys smash that like button, let me run the intro. What's up, guys, and welcome back to the channel, and let's dive right into this one. It's been a crazy news weekend for all of us. So notice that the Wall Street Journal made an exclusive news break today, just this evening, where they said that Facebook's parent Meta is preparing to notify employees of a large-scale layoff this week. And so it looks like the planned cuts are expected to impact many thousands with an S, of its workforce. And recall, this is what they said in their quarterly conference call that they had just last week, or I guess maybe the week before. I can't remember exactly when it was, but they said, we expect hiring to slow dramatically going forward and to hold headcount roughly flat next year relative to the current levels. We are holding some teams flat in terms of headcount, shrinking others, and investing headcount growth only in our highest priorities. As a result, we expect headcount at the end of 2023 will be approximately in line with third quarter 2022 levels. So nowhere in that guidance did they say, I mean, they might have hinted at it subtly, but they didn't really tell us that they're going to be doing mass layoffs that are going to be impacting thousands of people. So this is somewhat breaking news because a lot of us are forecasting higher expenses into 2022 and 2023, and I'll show you how I'm modeling that. I did a half an hour full breakthrough of Meta's results and a full model walkthrough, which I will link at the end of this video so that you can get caught up on that and just get caught up on all the details that were released in the Q3 call. But this layoff situation was not told to us in any sort of direct way, and so this is a surprise to everyone right now. And here's the article. They're saying that Meta is planning to begin large-scale layoffs this week, according to people familiar with the matter. I always highlight that. A lot of people skip over that, but I just want to point out that they're not looking to name sources, and so it could be FUD. So just keep that in mind, guys, always with this kind of stuff, and I will always highlight it. And so in what could be the largest round in a recent spat of tech job cuts after the industry's rapid growth during the pandemic. And so the announcement is planned to come as soon as Wednesday. And the planned layoffs, just like I said at the beginning of this video, would be the first broad headcount reductions to occur in the company's 18-year history. And I guess it's easy to not have to lay off so many people when results are just going up year after year. This is the first time, in my opinion, I think, that Facebook is seeing a massive pullback in advertising spend. I mean, they probably could have experienced it in 2008, 2009, but they weren't public at the time, and so none of us would realize that, or none of us would have known that. But I think they probably didn't experience it that badly. Right now, they're experiencing really tough results. Now, in that video that I referred to, that 23-minute video or 25-minute video, whatever it was, I did mention one piece of data where they said that they were able to sort of hold advertising spend somewhat flat because they were able to offset the declines in ad spend prices with ad impressions. And so that's not a sustainable strategy, especially if ad pricing continues to go down. And so my question is, are they reacting to that as they're seeing ad pricing continue to decline further, or did they already plan this? None of us know. But the question is, now I don't know what to think about their guidance for next year. They did provide us with guidance for year end for total expenses, and I can't remember off the top of my head, but I think they did provide us expense guidance for 2023 as well, fiscal year 2023. And so I don't know how to think about that anymore. So I can't rely on my model until they provide us further guidance here. But at the end of the day, all it would really mean is that the expenses would be lower, but could those lower expenses get offset with lower revenue? We don't know. This is why modeling Facebook in this environment is very difficult. And that's why I did decide to walk you through all of my estimates and every single line going right down to net income, because I do want you guys to make your own decisions if you're investing in Meta. And like I always say, there's two things you always have to do when you buy a stock. The one thing is read all of their disclosures, including the transcripts for their earnings conference calls, because you can get a lot of nuggets of information there. And the second thing you always have to do is build a detailed model just to make sure that you understand the ins and outs of the company and what makes up your valuation. Now, they're saying that they're focusing their investments on a small number of high priority growth areas. And that was their reply, because they really didn't want to comment on this news breaking. And recall, guys, that Mark Zuckerberg did say earlier this year that realistically there are probably a bunch of people at the company who shouldn't be here. Mark Zuckerberg told employees that at a company-wide meeting at the end of June. Meta, like other tech giants, went on a hiring spree during the pandemic. They added 27,000 new employees in 2020 and 2021. And just recall, that's like a quarter of their workforce, because I think they have around 85 or to 87,000 people in total. They also added a further 15,000 people in the first 9 months of this year. So in other words, that number is really telling you that close to half of the workforce that Meta has right now was added in just the last 3 years, I would say. And so, if you're expecting massive slowdowns in advertising spending and thus your revenues are declining, plus there isn't as much of an uptake on the metaverse that you would have normally have expected, then obviously you have a lot of redundancies in the company. And so you could very well see a lot of roles being eliminated in this situation. And that's what we're starting to see now. Now, this news came on the back of last month. There was an investor that said in an open letter to Mark Zuckerberg. Now, I don't think I covered that open letter, but they did say that they should slash staff and pare back its metaverse ambitions, reflecting the rising discontent among shareholders. And, that investor is not the only one. A lot of analysts have also cut their expectations and price targets because of the rising discontent among shareholders. Now, all of this hiring, of course, has increased Meta's expenses, and so they have risen sharply, and that's what I sort of walked you guys through when I modeled out expenses for 2022 and 2023 and beyond. And a bunch of Meta's ballooning costs stem from Mark Zuckerberg's commitment to Reality Labs. So the question is, do they continue investing as heavily into Reality Labs as they have been? And I think they are just going to continue to invest in it because they really believe in it. And I don't think anything changed from their Q3 earnings call to today. And this is what I mean about the uptake into Reality Labs. So the effort so far has cost $15 billion since the beginning of last year. But despite investing heavily in promoting this virtual reality platform, Horizon Worlds, which is available to users now, the people who've been using it has largely been unimpressed. And I'm actually going to show you a YouTube video, just tag in some comments, because I was actually watching a YouTube video on Horizon Worlds today from gamers. And this is what Mark Zuckerberg thinks about that. He says that I get that a lot of people might disagree with this investment, but he thinks that people are going to look back on decades from now and talk about the importance of the work that's being done here. And so this is why I don't believe that they're going to be backing off from those metaverse investments anytime soon. And once again, like I mentioned previously in this video, after that call, analysts downgraded their rating for Meta stock and slashed their price targets. And so people are not happy right now. And this is what I mean about gaming YouTubers talking about the metaverse. Now, guys, I'm a huge gamer. I have a PS5. I've been gaming since the original Nintendo days. I actually just finished Horizon Zero Dawn, which was a game on PlayStation 5. I loved it. I really am looking forward to the next game. Although the storyline in Horizon Zero Dawn Part 2 wasn't that great, but oh well. But notice that this gamer named this video, I played Facebook's VR metaverse, so you never have to. So you can already see that it's a hugely negative video. And this guy's got almost 3 million subscribers, so he's a very well-respected gaming YouTuber. And so I wanted to see what the comments were. Notice that one of the top comments are the fact that you have to pay Facebook to applaud and none of that money goes to the person you're actually applauding for is really spectacular. And what he's talking about there is that in the video, the player actually went into a comedy club and he decided to do a performance. And it's funny that a lot of the people in sort of the metaverse, they came and they sat in the club and they were watching him play. But what they can do is they can pay for applause, but the money doesn't go to the player themselves. Now, that might not actually be the case. He might actually get some money from doing performances, but it didn't look like he did get money. Now, formerly as a real stand-up comic, and I've performed at every major club in Toronto. I've performed all over the country. I've also performed internationally. I was appalled at what I saw in the metaverse from like what the stand-up comedy situation was like. And so I would, as a comic, I would never go and perform in the metaverse the way it looks like right now. I have told you guys in the past that I do believe that there could be potential for comedy in the metaverse, but you have to be able to see more lifelike people. You almost have to see me the way that I look, because so much of comedy is being able to read the expressions and the body language of the person. It's very hard to do comedy when you just have a floating avatar with no legs. I just don't think it works. Another important comment was, this is as close to the metaverse as I ever want to go. So that pretty much tells you how people are thinking about it. And the third comment that I highlighted is that I have to give the developers some mad respect for this. They straight up scammed Zuckerberg out of $15 billion. This game was literally made in Unity. I don't really know what that means, but I'm sure it's just a platform. One person could make this entire game on their phone over the weekend. So effectively what you're seeing there is, obviously it's heavy hardcore gamers that watch this guy's channel. It's very clear that they understand the gaming space, and they're telling you that it's trash. And so I don't know how the metaverse comes back from this. So I think Horizon New Worlds is pretty much dead on delivery, but you know, their AR platform that makes working a lot easier, that could actually have some legs. And so I respect that they're teaming up with Microsoft on that, but you know, it's a prove it to us before we buy into it type of thing. And now I did mention to you guys that we are forecasting higher costs, or at least I am in my model. And so notice that in 2021, I have it in the blue box. The total cost as a percentage of revenue only ever goes up to around 60%. Those are their actual results. In 2022, I expect total cost as a percentage of revenue to go up to 75% based on the guidance that they're providing us. And notice, actually, I just realized now they did provide us with guidance for 2023. So I increased total cost as a percentage of revenue to 81%, and then in 2024 I kept that relationship. And so if they're doing mass layoffs right now, how do we think about total cost as a percentage of revenue? Now, I would be tempted to reduce the total cost as a percentage of revenue down to maybe 75% to adjust for the cost savings that they could generate. But my question is, why would they be doing such mass layoffs unless they expect advertising spend pullback for the next year? So I would think, and this is sort of my inclinations here, so my spidey sense is tingling right now, that you might be offsetting those savings that you get from the headcount reductions with a reduction in revenue in 2023 and beyond. And so I'm not touching my model at all. Let's wait for the Q4 results to come out, and let's see what guidance that they provide, and I'll adjust the model thereafter. But I think it's getting harder to rely on the guidance that's being provided by management here. And what you really have to do is look for a huge margin of safety if you're going to buy this stock. Now, what is my margin of safety with this stock? I don't own it yet, just full disclosure, but here's what it is. I'm valuing the company at approximately $150 per share. The current share price is $90 per share. I don't think I'm willing to touch this for anything under $70 per share. And that's less than 50% of their valuation. Now, I know a lot of you guys will disagree with me, and it's totally fair. I agree with you guys that this could potentially be a monumental opportunity, but I also think that this stock can go down a lot further, as the Fed has already signaled that they're going to continue to raise rates, and they're not shy about it. And so that could cause advertising pullback to continue further, which could cause pressure on the stock. Now, I'm not a huge bull on Meta anyways. I rather own Google. I rather own Alibaba. I rather own a lot of other opportunities. This is not number 1 through 5 or even number 1 through 10 of the potential opportunities on my list, but I will add to it if this thing gets really cheap. And so let's see how this plays out. Also, guys, what am I missing in my analysis? Let me know in the comments. It's totally okay to disagree with me. We have to learn to sort of get along when it comes to sort of like our valuations and how we think about opportunities. So let me know. I learn a ton from you guys. Okay, if you missed out on that 30-minute video where I totally broke out their Q3 earnings, you can get to that video right here.